The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Beatrice Potter. Believe there is a great power silently working all things for good. Behave yourself and never mind the rest. Market-wise, let's take a look at it out here. We have the Dow Industrials down 161. Nasdaq's off 41. S&Ps are off 18. Gold contract down $3.80, trading at $1,189 an ounce. Silver down 9 cents at $16.48 an ounce. Platinum off $2 at $1,143 an ounce. Light sweet crude up 57 cents at $60.97 a barrel. Bonds, we have the 10-year down 9 ticks, 127.04. 30-year off 1 point and 23 ticks, almost 2 points at 154.11. King dollar down 1,000 ticks at 94.19. Euro is up 163 at 113, and the yen is trading at down 51 at 119.34. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, we have wide price spread. We get expanded volume. Bottom line, folks, you're going south. And as we're going south, what you're going to see out here, right, thus far, we've done 100 million shares in the NY and the SPYs. That's after, of course, trying to get up to the highs there with 70 million. Your swing point that we're breaking down today is 161. So where's your next swing point? Bottom line, your next swing point is down here at the 17th of April. The 17th of April, the low of that swing point is 207.01. And right now you're 207.26. So we're going to be making our way down to that point. All surprises, folks, to the downside. Why? Because this baby just can't handle higher price. The NDX 100, if we go over to the 3Qs and you take a look at the 3Qs, what we're doing in the 3Qs is this. 3Qs are trading out at a price point of 106.34, down $1.12. Volume, 32 million shares. You're breaking the swing point of 44 million. Bottom line, the 3Qs, they're also heading for the 17th low, which is 105.55. Right now, we're at 106.35. If we go take a look at the small caps, the IWM, they had basically taken the IWM apart first. The small caps are down 27 cents. You're at 25 million shares. That basically is drying up somewhat at this point. But the small caps themselves, the IWM still wants to run into the price point of, man, this is pretty intense, actually. 119.83. 119.83 is the next level there. Gold contract. What do we have with gold now? This is where this is going to get really cool, folks. And this is what also happens. This market right here, we all can learn so much, because what happens at certain points in the marketplace is that you get large changes of trend, okay? And large changes of trend, okay, turn around. And what do they do? You can learn a huge amount in the marketplace when you're getting a large change of trend. The large changes of trend that we have right now go like this. The dollar index is going down with volume. Bonds are going down with volume. Gold, okay, bottom line, is flat. Now, the divergence inside the market right now with the dollar going down and gold being flat is going to straighten itself out. Where's it going to straighten itself out? What I expect you're going to see is that you're going to see gold go higher, dollar continue down. The bond market is screaming, and what the bond market is screaming is this. The market is taking conniptions because of the fact that bonds are going south, interest rates are going up without the Fed doing anything. So those different dynamics you want to wrap your head around, because when you get a larger change, a trend like that, it's important to understand what are we looking at. So if we go over to the gold market for a second, we take a look at the gold market. This is what we have happening in gold right now. Gold's trading out here at a price point of $1189.60. It's going to be, I suspect, like a rocket ship. And this is why. When the dollar is down 1,000 ticks and gold hasn't moved, bottom line is that you don't have buyers, and it's just going to be a matter of when those buyers come in. And what you'll see today, we're backing down on gold. We got 100,000 contracts. Bottom line, this wants to make a run up to this 1224. How we do it is going to be basically, I suspect it's going to be a thunder shot on the way up, and basically take it out and have an ABC structure on the way up. We go over to the dollar, and here's the correlation. There's still a disconnect out here, and this is where it's going to really get interesting. So the dollar is doing an ABC structure on the way down. It's taking its B point out. It's taking it out with volume. Well, I suspect it's going to be volume. We need another 10,000 contracts before the close. We may or may not get them. Okay. Bottom line, we've already hit 93, 96. 92 is the number here. That's where this thing wants to go. Now, that being said, what ends up happening, if we go to the TLT for a second, realistically, what should be happening inside the dynamic of the marketplace is that you get interest rates going up. So the 10-year yield right now is at 2.2. As interest rates go up, you think that the dollar would be worth more. Bottom line, we'll see where that shakes out. What I do expect you're going to see out here, if we take a look at the TLT, you pull this TLT back, what you're going to see is that the TLT has already broke your swing point from March 6th. That's a big swing to break. The 10-year itself, we take a look at this. We take a look at this 10-year bond. What you have with the 10-year bond, we've done 1.4 million contracts today. Now, the actual 10-year, the low of the 10-year, is 125.29. Right now, we're at 127.16. So I expect it's going to get to the bottom of it. The 30-year has already taken that low out. And what you have with the 30-year is this. We're doing 246,000 contracts. The swing point from the 30-year at 154 was 385,000. So it's just going to be a matter of when that these bonds bounce. That being said, what I expect you're going to see when the bonds bounce, it's going to be on light volume. The 34-year bull in the bond market, the probability is that it's over. That's the bottom line. So if you're looking for a house out there, you're looking to remortgage out there, all of the above, folks, go do it. It doesn't mean that interest rates are going to the moon, but interest rates are going up. You know, at a 2.2, you probably you'll still get a 3.9 to 4.0 30-year mortgage. Go do it, and do it right now, because the bottom line is that when you can't bust them down anymore, where are you going to bust them? You're going to bust them topside. That's the bottom line. Let's go take a look at the and what's really unusual here, there's no doubt, this is another dynamic change. The market's down, bonds are down. And what that's about, so now that is being answered. What's being answered there is that the market is freaking on the aspect that money's not going to be free anymore. That's kind of how that shakes out. And you can see the amount of leverage that's in the marketplace and in the bond market in particular. It only takes a 1% move. A 1% move in interest rates, folks, will wipe out some bond folks. That's the bottom line. It depends on how much they're leveraged out here. Excuse me. Let's go over to the oil market. We'll take a look at oil. So CLM5. Oil market right now is trading at a price point of 60.85. We got up to a price point today of 62.58. And that 62.58, interesting. You know, it has some juice behind it, so it can get tested again. That's the bottom line. They can get tested again. You know, that's how this is set up. I wouldn't be shotting this thing just yet. It's tempting, but bottom line is it's not ready yet. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials down 175. NASDAQ off 46. S&Ps are off 20. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Some of the high-volume stocks in this market, and we will have an expansion once again with volume on the way south, folks. You get Apple down $1.70. You got Microsoft off $1.50. Bell's down 58 cents. No real destruction out there. Inside the Dow Industrials, okay, there's only one stock right now that is positive. Inside the Dow, you have McDonald's is up 6 cents. Now, taking it south, we're down 172 points. You got Microsoft is leading the charge with 156. Big Blue's right after it. That's down 254. You have Pfizer off 46. Intel's off 55. Inside the NDX 100, we take a look at the NDX 100. You get Alexa Pharmaceutical. That is Alexin is down $15. That's the one that's taken over Syngenta, I believe. Yeah, that is just a mind blower, folks. Okay, that takeover, the stock the takeover was for more than 100% of the value of the stock. So absolutely amazing. No two ways about that. There's a lot of people that woke up very happy this morning. Seagate Technology, that's down $1.80, and you get Baidu Technologies is off $5.97. If we go over and we take a look at a longer-term view of the NDX 100, and you take a look at the Qs, what you're going to see here is that the Qs themselves and the S&Ps, they're all doing the same thing. And what they're doing, folks, is that it's like a choo-choo train that leaves the station. And as it leaves the station, it gets steam going. You know, what the market has done here is starting to get ahead of steam. And what happens with ahead of steam is that, bottom line is that you get to lower swing points very quickly. What we had intraday out here today, the market itself has done A to B equals C to D inside the futures market. The NDX 100 right now, we're at 106.25. Well, that's in the middle of nowhere. So when you're in the middle of nowhere, what are you going to do? Well, you're going to go somewhere. And where this is going to go, you know, before it wants to bounce, is going to go to that swing point. That swing point is a high-volume swing point. It's the 17th of April. We came down there. That's 105.55. What I expect you're probably going to see here, we'll see whether it can bounce at all, but the A to B equals C to D is what. So 111.16 is the high to 107. So you get $4, which gets you 105.91. Yeah, see the way this is set up? Okay, so the way this is set up is we went to 105.99 today. That's a 1-to-1 ABC on the way down. But that swing point, the swing points are just so much closer that I suspect more than likely they're going to try to jam into those swing points. Now, after the close out here today, we're still going to have a lot more numbers that come out. If we go over to the DAX in Germany, what you're going to see is that, you know, that came off the highs, you know, thundered all the way down from 388. That's already down, 12,388. That's down, you know, 1,000 points. Not that, yeah, that's a lot. I mean, it's 1,000. It was a straight move on the way down, just like the straight move on the way up. And you have volume behind the move. So the DAX, which likes to trade, here, let me put this up here so you can see this shake out. So that what the DAX has done, you know, the DAX topped out the 13th of April, comes down, monster volume coming out. So the first stop I expect in the DAX is at 10,700. You know, that's another 500 down. That in itself is basically verifying that, you know, all these markets basically want to pull back, because what we've had is that we're in a one world market now. The real key is that how do they bounce and how do they come back? Do we have volume on the bounce? Do we have lighter volume on the way down versus the way up? So you can expect a lot more action. After the close out here today, we're going to have a slew of earnings that are going to be coming out. And we have Activision Blizzard. You got Apollo Residential Mortgage. You got C-Trip. We have Diamondback Energy, Corey, Green Mountain, Learning Tree, Sunoco, St. Joe Company, Transocean, Whole Foods. That's going to be fun. So bottom line is that there's going to be a lot of numbers coming out there after the close. We go take a look at the GLD. So the disconnect out here today, there's no two ways about it. The disconnect out here today is that the dollar is getting crushed and gold can't get out of its way. We'll see where that shakes out. The GLD is pulling back 2.7 million shares, and if you're a bull in the gold market, folks, you're going to love it, okay? Why? Because it's pulling back into 7.5 million shares and 12.4 million shares. Okay, that's how you want to see a pullback. This is a cause-building, my take is a cause-building deal here to get to a lot higher price. And if we go back to the dollar for a second, you got to remember that the dollar had done an ABC 2-to-1 on the way up. When you do a 2-to-1 ABC structure, anything over a 1 to 1.618 on the way up or the way down is an immediate change of trend. We got it once again. Took all of 4 to 5 days for that immediate change of trend. So that is a big number. There's no two ways about it. Let's go take a look at international paper. Now, international paper yesterday got whacked in an incredible way. The reason, and I started bringing this up yesterday, and I believe a commercial got in the way. The reason that you want to keep your eye on international paper is this, is that they are in the box business, folks, okay? And what ends up happening is that the economy worldwide needs boxes. That's the bottom line. I remember, you know, when I was in Boston, one of the biggest box companies in the East Coast of the United States, it happens to be in South Boston. And I would always be, you know, I happen to know the guy that ran the place, and I was always checking. You selling boxes? You're not selling boxes. Where is it going? Because the boxes themselves can tell you about a larger view that, okay, is stuff getting pushed out or not? Well, the way that international paper is trading, this baby just ripped apart a whole level. You know, it had broken topside November of 2014. We're at 51.73. Now, this is a crucial area where we're at, because what it does have is this, is that when this went topside, that number, that's the last time with volume. And if you have the out of time in the trade, you know, this is just a classic. It's like, how the heck does this happen? You come off a high, and what does it do the first time? It goes right back to the last time with volume. 54.40 is the last time it had volume. Now, the low of that is 52.57. We'll see how it handles that area. If it handles it and stays above it, well, that's all good. If it doesn't, you're talking a whole different ballgame. Because when you take a look at this, the last time that international paper had any real good juice in it is down at $29. And of course, $29 from where we are right now at 59, and where it was 3 weeks ago at 58. I mean, we're at 51 at 58. That's a 50% hit. That is one monster hit. There's no two ways about that. Let's go over and take a look at Goldman Sachs. So Goldman Sachs came out last night. This is a little deviant. Goldman Sachs came out last night, folks, and said that they are going to have to put more reserves in their estimate, you know, and it's pretty amazing. They have already put away $3.8 billion for legal costs. Well, they come out and says, okay, hey, guess what? That's not going to be enough. Yeah, these banks are a trip. Anyway, Goldman is trading at 194 or 98, and that little baby's going to be making its way down to about the 180 mark. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 148. You get the NASDAQ trading off 37. S&Ps are down 16. And across the board, folks, it looks like we're going to come in with some juice in this market. Right now, the NYSE is at 563. That'll set up about a good 700 on the NYSE. NASDAQ Composite is on a 1.7. The NASDAQ Composite, this is classic too, folks, okay? It can get the juice on the way up, but man, on the way down, those doors are never open enough for the NASDAQ Composite. It's just, when that sell button hits, man, it goes in an incredible way. So the Composite the last swing point on this composite, we hit 4888, 4888, and the swing low is 4825. That's going to be easy to hit. You know, you got to remember we're only in Wednesday of basically a week that's already down. And when you get a down week going, the problem coming in on a Thursday is like, can you really go down 4 or 5 days in a row? Well, you can, in the aspect that the choo-choo train has started and the steam is rolling. And let me show you something here, because this is pretty bizarre. Now, this is showing that there's still absolutely zero fear in the marketplace, and that the buying is still in there, and basically people that are looking for a bounce are still buying. So check this out. What you're looking at right here is this. This is a short-term trend. And when you look at this index, you're going to see that we're at 0.90. Yesterday we're at 1. Day before we're at 0.83. Prior day we're at 0.57. Now I want to do this correlation with you with the S&P at the same time. So no doubt 2 days ago you could see why on the 4th we were at 0.83. You know, you're at a higher price. So what this figure gives you is this: is that picture that you're walking into a big hall. And in that hall, folks, you have stocks on the left-hand side and stocks on the right-hand side. And let's say there's 50 rows of each on the left-hand side and the right-hand side. When you have a 1, which we had yesterday, that means that you and I, as we're walking into that hall, everyone is getting the same amount of buying power, meaning that we're buying 1 of each one of the 50 on the left-hand side and 50 on the right-hand side. That's what this number generates. Today, we're at 0.90. So what is that saying? What that is saying, this is what's so bizarre about this. It's not bizarre about the downdraft. I've seen this plenty of times. And this is when the heads up here is that you're going to get a much larger downdraft. And what this is not you and I that are going into that marketplace, because you and I couldn't generate a number like that that's that even. What this is, unfortunately, this is all the mutual funds that are out there. This is all the people that are putting money into funds, putting the money into their IRAs. And this is money managers that are turning around, and they are buying the dip. And as they're buying the dip, they're spreading it across all the equities, hoping and praying. Bottom line, you won't even get close to a bottom until you see that baby jump up. In this case, because we've already come off 45 S&P points in 18 hours. You will, when that jumps up to 140, 150, 170, that, and you need that for a couple days, that is when you'll see you get a bounce. So these phenomena that take place at certain times are pretty intense. If we go take a look at so that one there gives you an idea of, okay, are they buying, are they selling? And what are they doing? You know, spread across a long marketplace. Now, the second one I just brought up is the tick index. And both of these, by the way, you know, I only use them at extremes in the marketplace, because to me, that's the only time that they basically will generate something extra information. Now, what we have here, that's a tick index, okay? That tick index is saying that intraday, we get a minus 1205. So what did happen there is that there's a little spooking of the marketplace, and that little spooking of the marketplace basically has, just took place. Minus 1208. What that is a fear indicator that people were selling on the bid simultaneously. That's what that is. So it's going to be wild watching this whole thing shake out. Because when you take a much longer-term chart and you set up a longer-term chart, what you're going to see here, and I use this in my daily newsletter this morning, but what you're going to see is that when you take the NDX 100, I'll just take the NASDAQ composite, I'll use the NDX 100. When you take this and you put this on a long-term chart, what you're going to see is that when we broke the trend, and we broke the trend, by the way, April of 2014. I know that sounds bizarre, but that's when we broke it. It never could get back inside the higher channel. That is typical of two different things. It's typical of large tops that come in for a long period of time, and it's typical of huge distribution. So what you're going to see is the first break was monster. We were only at 87, but that was monster. The second break was monster on the way down. Third break was big. The fourth break you couldn't even get into. Let me do this. And what that sets up much larger corrections, folks. That's the sad part about all this when it's, you know, push comes to shove. What you're going to see is that this little baby is going to be one nasty correction. It's going to be, you know, faster than most folks think. And, you know, that October 15th swing low is still so far down. And the Index 100, well, it's getting closer in the Index 100 right now. You know, we had hit the 111, you're at 106. The top of the is down 11 points, so it's not the end of the world. But the bottom of that is at 90, which is down 16 points. That in itself is pretty intense. The bond market is basically, well, here, now let's bring the bond. I'm going to bring the 30-year bond up, and just we're going to take a look at this and say, okay, so if we take the 30-year and I put this on a 10-year, we're at 154 right now. Yeah, this only has to get down to 153.11, and we're going to be back at 136. So that's a mean correction. Well, it might not be a mean correction. It might be, you know, you go one way for, what, 34 years? Can you go the other way for 34 years? I don't think so. I think what we're going to have here is that the rates are going to go up, you know, whether it's a percent and a half over the course of a year and a half. But that in itself, because of the way that we've had zero interest rate structure since 2007, and we're at 2015, there's going to be newer folks in the marketplace that can't correlate to that at all. There's going to be older folks in the marketplace, and that correlation is going to come down to the price point of what they remember. And, you know, bottom line, in myself, what I remember is when bonds corrected in 1994. Now, check this out. This was this is about a 12% correction in bonds in 1994 in a bull market. That small correction wiped out so many people. It was almost like it wasn't like a depression, but it certainly scarred people. And the reason it scarred people was this, is that the people that own bonds do not expect to lose their principal. That's why you own bonds. What had happened there, and what will happen this time, owning a bond, folks, is great. If you're in the bond market, you own a bond, you have the piece of paper, you know that, okay, I'm going to get paid this many years at this interest rate. That's awesome. You're not going to lose money, okay? That's the bottom line. You're not, because it doesn't fluctuate. You're in a bond fund, forget it. It's going to be wipeout city. The reason it's wipeout city is that when you're buying into the fund, without knowing it, you're buying bonds more than 100 cents on the dollar. It's not like, you know, we have the Tiger First Mortgage Program. That way that works, here's the piece of real estate. Here's the appraisal, which is 70% of the piece of real estate. You're making 5% per year paid monthly, 4 years, end of story. That's it. Doesn't fluctuate, doesn't go up or down. Doesn't trade. It's a beautiful thing, right? You buy a treasury. You buy a treasury direct, awesome, okay? You get it off the government, here's your bond. In this case, that's digital. You're going to get paid flat out. Now, you buy a bond fund. What happens when you buy a bond fund? When you buy a bond fund, when I go with these bond numbers each and every day, you're buying into that larger number. And just so you understand, when I'm explaining, and I'm going to go back to the 10-year for a second and show you something. The 10-year right now is at 127.03. Well, that means you're paying $127 for a $100 bond, just so you understand how that works. So you can see the correlation. When it goes down, and that's inside a fund, that is where the loss structure takes place. This is Tom O'Brien. This is TFNN. You stay right there, folks. Be coming right back. Dow Industrials are down 136. Nasdaq's off 33. S&Ps are down 15. Gold's off 250. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow's off 127, Nasdaq's down 32, S&Ps are off 14. And let's go over and we'll take a look at the XLE inside the whole energy sector. XLE out here right now, we're trading at a price point of 81.20. This has been a nice counter trend bounce, but that's about what you have here, folks. What you have is that the XLE, when you take a look at it, we had come off the high at 87 bucks going in November. Straight line move down to 72. The gap, this had a gap. When this gap down, folks, that gap down with a vengeance. A gap down at $85 opened the following day at 79. What we did is that we got into that gap, but just slightly. It gave it up. Now, as it gave it up, though, you get the volume expanded. So what does that do? Well, oil equities in general, and this is why I love oil equities, whether they're high or low, they love trading in monster ranges. And they trade in these ranges for a long period of time. So the top of the range, we just hit. The bottom of the range out here in the XLE's 72. If we go look at ExxonMobil, XOM, same type of setup. Now, Exxon is basically screaming that the probability of the XLE going down to the bottom of the range is pretty good. And this is why. Exxon has come down substantially from its highs. You know, we're talking, you had the high of 93 bucks. It goes down to 82. You have a counter trend bounce that goes up to 90. So that bounce was nice. That bounce, however, was right into ice. It was a classic going up to ice, giving it up. And if we take a look at the daily, it went up to the 19 million with 11 million. Gave it up. We're off that level right now. You know, we'll see how it handles the 85 area. 86.37 to be exact. We had a little pop up there with juice at 86.37. Chevron, we go take a look at the CVX next. Chevron, so Exxon's the largest weighting structure. Chevron is next. Chevron basically didn't even get up to ice. And Chevron by itself had been a lot stronger than Exxon. What you have with Chevron, and this is a nice piece of information that the market released, is that you have a high volume swing low January 30th. The high of that low is 98. The high of that low is 103. The low is 98. That's going to get tested. That's where these babies are basically looking to run into. So how we get there, I suspect you're going to get there with high volume. You're going to get accelerated volume as it comes into a lower price. We go over back to the SPY just for a few here. We take a look at as we're coming into the close out here. The SPY has done 117 million shares, and it's pretty amazing, but guess what? You got an expansion of volume once again. Yesterday we did 113 million, and coming into this close, you do only have 6 minutes, but in 6 minutes, the SPY will probably do another 10 million shares because you're going to have market at close orders out here. So with the SPY, what you're going to see with the SPY is that it's going after the 207.01. That's April 17th low. It's a high volume low. I suspect what you're going to get, we're going to get some steam going. It'll get into that tomorrow. Friday, we'll get into the very bottom of the consolidation, that where we had consolidated in December, not December rather, in March. Then we'll see if we can get a bounce. The Friday's going to be really crucial this week. It's going to be wild watching how this whole Friday shakes out, particularly because we already know we got a disconnect between the dollar index and gold. With dollar being down 1,000 ticks, gold should be up. So the gold bears can make the case, hey, why isn't gold moving? The gold bulls, myself, to me, it's building cause. But both cases, hey, listen, that's what makes a market. Two sides make a market. I particularly like it when we have divergence that is that extreme. The reason I like it is the aspect of how the sectors and the indices are going down. Dollar is going down exactly like it should go down. You're bouncing with light volume, you're breaking lows with heavy volume. Gold, just the opposite. Gold is pushed higher off the lows with high volume, pushed back with lower volume. And yes, when they kill the price of gold, fast price destruction with light volume is awesome. The second part that is basically just as good is that when you break swing points, you break them with lighter volume, you reject that swing point, and then you take off again. That's the essence of, are there buyers? Are there sellers? Where is that whole mix? And, what does it mean as to where the market is going? The European markets, they're going south. In Asia last night, we did have the Hang Seng pull back once again. Now, the Hang Seng, folks, the Shanghai. The Shanghai had gone up over 40% in 3 months. 40%! That's like insanity. But bottom line, that's what Shanghai likes to do. Well, that's come back 5.5% in two nights. The Shanghai looks like it's going to bounce again, because the Shanghai last night only came down with 46 billion shares. They have so many shares, like it's pretty sick. But bottom line is that, that can get a bounce out there. We'll see whether that bounce is an ABC structure on the way down. You bounce at lighter volume, that's what you're going to get. You're going to get an ABC structure on the way down. After the close out here, there's going to be a lot of action once again. Why? Because the number of earnings that are coming out are huge. And the thing that is pretty wild inside a lot of these earnings is that the market participants, the companies, are talking about on a continual basis that the strong dollar has hurt them. We'll hear, can't wait to hear what the next quarter brings, because the bottom line is that the strong dollar for these earnings that are coming out right now, the dollar topped out March 13th. So what you do have is that at the end of this quarter, the dollar's been going down April, and we're into May right now. So my take is that, next quarter the dollar is going to be a lot lower, and these companies are still going to have somewhat of a problem. I think the larger problem with the market has told us out here today is this. The market is doing conniptions because interest rates are going up. The free ride looks like it's going to be over, and the market's going to have to get straightened out for that free ride. What you will get in between that is, because of the velocity of the move lower, because of the amount of margin and interest and leverage that's in the marketplace right now, you don't have to go down too far without either funds, individuals, companies having to sell into the marketplace. That's where the steam gets going when this runs into lower swing points and, in fact, runs into lower price. ExxonMobil's down 46. You get Disney off $1.16. Walmart's down 3. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials. You get a nice little bounce out of here. Dow's down 90. Nasdaq's off 21. S&Ps are, look at that. S&Ps are only down 10. They just did a 10 handle all the way back up. And was it on light volume? Yes, it was, folks. This is just a trader's paradise out here. Going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Christian Larson. Live in faith that the whole world is on your side, so long as you are true to the best that is in you. Market-wise, let's take a look at it out here. We had the Dow Industrials down 86. Nasdaq off 19, S&P's off 9.5, all with volume, folks. Downtown with volume. Gold contract down $1.70, trading at $1,191 an ounce. Silver off 6 cents at $16.51 an ounce. Platinum, $1,144. Light sweet crude up 22 cents, trading at $60.61 a barrel. Bonds, we had the 10-year down 10 ticks, 127.03. 30-year off 1 point plus 23 ticks at 154.11. And the market, folks, is basically freaking out because the rates are going higher, bonds are going lower, and that divergence has changed, specifically meaning that normally when markets go down, we were down about 140 points out here today. The market bounced about 10 S&P points in the close. Bottom line, you expect bonds being up. Guess what? Dynamic has changed. Dynamic, I suspect, has changed the end of the 34-year bull market in bonds. That 34-year bull market, by the way, folks, it goes from 1981, and if in fact it is the top, it looks to me like it is, meaning on February of this year, rates had gone from 14.5%. They were 14.5% in 81, down to 0. So you can see that technically they're coming off the high with volume. So that means lower prices coming at us, high yields are coming at us. Fundamentally, it's like, can you go negative? Yes, you can. They went negative in Europe. So bottom line, you can go negative. But you can see the probability is that that's the end of a 34-year bull market in bonds. King dollar down 987 ticks at 94.21. The euro up 160 at 113, and the yen trading down 38 at 119.48. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the SPY, we take a look at the SPY. What you're going to have out here is this. We got down to a price point of 206.76. You bounced at the close. Big deal. You're going to get bounces out of here, folks. You did 128 million shares. Bottom line, what is it going after? It's going right after the 206. Oh, actually, that's pretty wild. How did that do that? 1 second. It got, when I was on the last hour, I didn't realize that it actually hit that. Oh, so it hit, this is what it did. It hit the 17th. You know, when I started the show, it hadn't been at the April 17th swing low. And that's what it wanted to do, and that's what it got. It got down to 206.76, 207.01 was the swing low. That was 191 million shares. We did 128. Okay, so what do we have here? Bottom line, yeah, you can get a small bounce out of here. That small bounce, I expect you can get up to 209.33. So we'll see how that shakes out. That's on the daily. Now watch what happens on the weekly, and that's a short-term phenomena. On the weekly, what you have thus far is we're at 128 million shares. That's in 3 days. No, not 128 million. We're at 312 million. And that basically is not monster volume on the way down. That's the reality. It's heavier, but not monster. Take a look at the 3 Qs. The NDX 100, what you have inside the 3 Qs is this. 3 Qs get down, close out at 106.71, and that still wants to get into lower price. The April 17th low on that is 105.55. We got to 105.99. The IWM, now the IWM led off the highs, meaning they took that south with the vengeance. What the IWM did out here today, IWM goes down to 120.24, has lighter volume, rejects that price. That's basically saying the IWM can bounce. So it's going to be interesting to see where this shakes out. In particular, what is interesting is that inside the IWM, of course, is that you have a lot of commodity stocks. And I'm going to switch gears on you and go right over to the gold contract. No, dollar first. And the reason being is this, is that there's a disconnect, okay, in a big way inside the dollar index in gold. The dollar index today did an ABC structure on the way down, wide price spread, accelerated volume, you know, bottom line, you're at 94.21. That thing wants to go to about 92. Now, we go over to gold. We take a look at gold. What do we have with gold? Bottom line, gold couldn't get out of its way. It backed down. Now, it did back down with lighter volume. That, to me, is building cause for higher price. You know, why? Because what we had done is that we had broken the lowest swing point last Thursday, broke it with lighter volume, rejected the low, moves into higher price. So that dynamic inside that's going to be wild, watching how this whole thing shakes out. If we go take a look at the TLT, the 20-year plus bond fund, the 20-year bond fund today had an expansion of volume. We did 14 million shares. We're at 120.56 right now. And what that sets up, this is nasty. So check this out. Ooh, baby. This is going to be amazing. This looks, you know what this is going to be, folks? Whoa, baby, watch out. Your A point, this is going to be an ABC down on a weekly. Okay, so your A point's 138. Your B point is 122. So we get 16 bucks. Your C is 132. So you're dealing with 116. Thus far, the B point on the weekly is 54 million. And we're already at 37 million. 37, 47, 57. You can do it. So this may just, you know, when you're doing an ABC structure on the way down or the way up, the A to B point, folks, and the C to D are straight line moves. And in this particular case, that's what it looks like we have. Now, what that will do, that'll run the 10-year into about 2.5. We're at 2.2 right now. The low that was generated in this 10-year was 1.68, I believe. Bottom line, if you need a mortgage, go get it right now. You know, I don't expect rates to go through the moon, but guess what? 30-year mortgage at, you know, 4% is a nice little deal. Let's go over to Whole Foods. Whole Foods, there's a lot of numbers that we're going to have for you out here. If you want to see a classic, you know, fill of the gap, it's going to be Whole Foods, okay? WFM, we take a look at this, what you're going to see. First, we'll take a look at what it's doing after the close. It closed at $48. It's trading at $42 right now, and it's about as clean as you can get. There's a gap that's wide open. That top of that gap is $40.64. Let me pull this back for you so you can see how this shakes out. If you have equities, folks, that are coming off the highs, and you have gaps below them, right? I don't care how far those gaps are down below them. Get your stop in. Do not let this go all the way back to the gap. This stock has gone from $57 down to $42. You know, 57 was the high that was out here on February 17th. This gap that's wide open is $39.79. Right now, this equity is trading at $43.19. That gap's going to get hit. It's going to get hit probably more than likely tomorrow morning. You know, so you know, be prepared for it. Hopefully, you don't own it. Let's go take a look at CREE, C-R-E-E. See what they have to say. Where is she? Okay, so no, wrong one. Sorry. Corrig, GMCR. So you have Corrig Green Mountain, that little baby. Okay, she closed at, that's right, this is going to be halted, I think. Okay, so this is going to be cool to see what happens here. This stock closed at $110, and what do they have to say? It's hard to tell whether they halted it for news or just news that they're... Oh, yeah, so this thing's going to get toasted and roasted when it opens. This is what it is. They halted it because their sales were the mid-single digits, and they had saw the mid down... They had said a lot higher price. That's the bottom line. You stay right there, folks. Coming right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver. but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over and we take a look at TripAdvisor. TripAdvisor just came out with their numbers. They had closed at $76. That is trading right now at $80.80. And numbers go like this on TripAdvisor. They missed their revenue numbers. The market's digging what they're doing, though. The estimate, first quarter, the estimate was 55 cents. They made 54. The revenue, the estimate was 365. Well, they only missed it by $2 million. And they made $364 million. Right now, that equity is trading up $2. And that's going to basically, do not be buying this. Now, let me show you this one also. This one is interesting. Why? Because it's come off its high of 91. You're at 76. You're going to get a bounce, up to about 78, 80. But what this has done, folks, is this. Now, watch how this trades out for the next 3 or 4 weeks, because you'll end up seeing this gap get closed. The last time TripAdvisor came out with the numbers, they had good numbers. The stock had gapped from $67, opened up the following day at $77. So it's a $10 gap. They don't stay open. A $10 gap, that's a 15% of the price at that particular point. What do? It goes from 77 all the way up to 91. So picture, there's plenty of people that buy it at 91. It's like, man, it's sad but true. Comes off 91, gets down to 76. As soon as it got back inside the bottom of the gap is $77. And today what we did before the bounce, you got down to 76.28. That's what markets like to do, folks, okay? So watch what happens. When you have a large gap like that, the top of that gap acts as support. First time down, only the first time down. How do you know that? Well, when you come down to that gap today, we had an expansion of volume in correlation of how it's been trading. You'll see the bounce come in, and then it's going to have to build cause to get into that gap. But that gap is going to be filled, okay? So it's a large number that you absolutely want to wrap your head around and make sure that you understand that you don't want to be buying equities that have large gaps underneath them. Let's go back to Whole Foods for a second. So Whole Foods trading down. Now, Whole Foods is filling that gap, but let's go through the numbers on Whole Foods and see whole paychecks, they call this thing, no doubt. The estimate, it's interesting. They made their numbers, but see, they want to see Whole Foods. The estimate was 43 cents. They basically made 43 cents. The revenue, I suspect, is what was coming down. Whole Foods shares fell in extended trading. Revenue in the second quarter was $3.65 billion. Analysts had projected 3.7. That's pretty close. Whole Foods has been lowering prices, especially on produce, as its competitors are selling more food. Bottom line, what you're going to see with Whole Foods is just wants to close up that gap. That gap is a large gap. It's going to get closed. Let's see. QRVO. This equity here, this is a, they design, develop, manufacture high-performance analog and mixed signal circuits. This closed at 69. It's trading at 74, so big gap up. Numbers go like this on it. The estimate was $1.10. They took in $1.11. They see $660 million to $670 million in revenue, and this is another one that you're not going to want to touch. Why? You came off that high. High that we came off is 84. You go straight down to 65. Yeah, it's going to do a nice counter trend bounce. It was up at 74, bottom line, about 2 weeks ago. It's going to go up and test that area once again. You know, so we'll see where that whole thing does shake out. Rig. Now, this is going to be a big one because this is a good one to keep your eye on. So Transocean. Transocean, folks, is all about drills in deep water. Big time, too, okay? So what Rig has been doing is that this is an equity that absolutely got destroyed even when oil was that much higher. The reason being is that once fracking came in, they don't need deep water drills. This went from $163. That was the high. $163, bottom line, down to $14. So, no, yeah, $13.28. So this can do a dead cat bounce. Now, here, let's bisect and dissect this. This is going to be fun, man. Okay, let's see what they have to say here first. Okay, so Rig, the estimate was 59 cents. They made $1.10, so they made a lot more money, okay? Now, see, this is going to be interesting. Okay, so now let's bring this up. That is trading at 19.29. Not that that's a lot, but you've had two signs of strength off the low. Let me put this on a weekly. No, I'll put it on a daily first. You have two signs of strength. Oh, I see what it wants to do. Okay, so check this out. This is going to be, now see, this is where different parts of the oil services industry is going to basically make out. But in the way rig is trading, this is just the opposite now. You know, the first two stocks that we talked about, that was filling the gap on the way down. This equity is going to try to fill the gap on the way up. This had gapped down on November 26th. It had closed that day at 24.72. It opened the next day at 21.53. That's going to try to go after that gap. Let's look at it on a little bit longer basis. I'm going to put this on a weekly. Yeah, if you happen to like the oil market, folks, this is something you might want to start looking at, because it's an equity that already got toasted and roasted. It's an equity that does like to trade like this too, by the way. I don't think it's going to go back to the highs, but you have a benchmark on it, and the benchmark would go like this. So we put this on a weekly. What you're going to see is your benchmark is going to be the week of February 13th. We had 63 million shares traded. Right there, 63 million shares traded. We've done 50 million thus far. The price point on that is 20.64. Now, if you can take that out with volume, what you'll get is this. What you do is you take the top of that, which is the 20.65. You take the bottom, which is 13.51, and that's 7 points, right? Add the 7 points on the 20.65, you get 27 bucks. Well, guess what? 27 bucks is kind of where a piece of ice is. That is just a price projection on that baby. So that's something that for you folks that want to be long, that's an equity that you very well could get that kind of juice in. So that's pretty cool. I mean, and you know, I suspect what you do have there is that's an aspect that the frackers are getting killed, and inside of that, because of the frackers getting killed, people are realizing, and companies are realizing that, hey, the longer term oil wells very well may be worth it. Because they've been getting killed for so long, you could even have a dead cat bounce and you got something going. Tesla just come out with numbers. Here's the numbers on Tesla. The estimated loss was 49 cents. They lost 36, so they lost less money. Tesla closed out here at a price point of $230.71. Tesla's trading at $234.44. You stay right there, folks. Market closed down 86, NASDAQ off 19, S&P's off 9.5. We're going to have our man, Mr. Steve Rhodes, coming back with us, growling and prowling. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Do you know the 7 most critical factors that influence every decision you make and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow finished down at 86, NASDAQ off 19, S&P's off 9, and GMCR, they just opened that back up, and that is getting toasted and roasted. That closed at 108. It's trading at 94. And the bottom line is that, no doubt, after the market closes out here, folks, okay, some of these stocks have got taken apart each and every day. Now, let's go over to our man, Mr. Steve Rhodes. And don't forget, folks, at TFNN, we do 10 hours of programming every trading day. Steve has an outstanding program, 9 to 11 every trading day. You can get this right on your cell phone, tfnn.mobi, right on your cell phone. Steve is going to be doing 2 workshops, okay? First one is on the 7th of May. That's tomorrow night. The second one is next Thursday, May 14th. Both of them, folks, are going to be from 6:30 to 7:15 p.m. The total cost for both of them is only $97. You can come over to our website right now, sign up right in the front page. The workshop is going to be about the psychology of trading, human pattern recognition with our man, Mr. Steve Rhodes. What's going on, brother?
How you doing today, Tom?
Doing great, man.
What a great trader's market this is.
There's no doubt, man. It's pretty intense, man. You know, the action, the surprises after the market are always seem to be downtown in an extraordinary way. You know, it's pretty intense. There's no doubt.
Yeah, and you know, if you like to trade the market both ways, you know, if you take a look at today, we had the Dow from high to low, at least the Dow in the futures,
yes,
over 300 points.
Right. I know that open, folks. The open today, the Dow stayed up all for about 30 seconds. It was pretty amazing. Yes.
Yeah, so it's so if you're a pattern recognition expert, master, then this is a great market to trade. In fact, since we've been in this, what we'll call consolidation to slow move up since January 1st, I've had to shorten my time frames and taking a look at trading decisions off of 30-minute charts.
Right.
And it's working really well. So I know that's got to be frustrating for a lot of folks out there, but we have to take what the market gives to us. We
There's
can't
no
control
doubt.
the market. Yeah. And it's so important to really understand what type of market that we're in order so that we can influence ourselves to make the right decisions. But I'm looking forward to this workshop that we're going to do tomorrow and then the following Thursday. Of course, a really, really smart man. You probably know him. He's pretty famous. Every day he says, what you think about, you bring about, and what you focus on grows.
Oh, you're too funny. Yeah.
Listen, that guy who says that, what I'm going to do this coming Thursday, what's really important is to understand what is it, what controls what it is that we think about. And it's really about the we spend so much time really on the psychology or on the technical tools of the market.
Yes.
But one time, I heard the show last Friday that you and Tommy were doing,
right.
The Bull Bear.
Yeah.
And there was a point in time when Tommy was talking about trading the 8X platform, and you mentioned something about emotion, like maybe there was no emotion. He said, no, there's always emotion whenever you enter the trade.
Right.
And it's just simply so true. So that's got to be one aspect of trading and investing that each of us need to be able to master. And especially in a market like today, I can think of no better time than when we're in what I'll call a non-directional market.
Yes.
And if somebody's really trying to navigate, then it's about really being able to work through your emotions with regard to whether you should get in or whether you should get out, and be able to trust the patterns that you trade out there. So it's an art. It's not a science, and I'm going to teach that art over the course of the next 2 weeks.
That's so cool, because what happens, folks, I think this has happened to all of us, right? When you're right there. When you're right there, it's so easy, okay? And it's a positive thought deal, folks, and we're more powerful than we realize.
Totally.
There's all of that in there, and it's like, man, when you're right there, and one of the keys, of course, is that how long can you stay there? And you'll, can you stay there an hour? Can you stay there 5 minutes? Can you stay there 4 hours? You know what I'm saying?
No, totally.
Yeah.
Knowing what to do and then doing what you know are two totally different things.
Yeah, they are.
Right?
Yeah.
And so that's why you really want to be able to master the psychology. And it's different for everyone. So it's not as if people that attend tomorrow's workshop and the following Thursday, like it's a cookie cutter approach. And if you just do this, you're going to get X. This actually I'm going to teach you how to be able to tailor it towards the way that you think, the way that you're programmed, the way that you're wired.
Which is crucial, right?
It is. Absolutely.
Because we only know what we know. That's a big deal,
No, absolutely. Yeah, it totally is. So I can think of no better time for us to actually do this type of workshop, especially because of the markets that we're trading right now. Hey, the first 5 years off of the March 2009 lows, with the exception of a couple of retracements here and there, it was pretty much a one-directional market.
Right.
We ain't in that market anymore.
No, there's no doubt. Well, what's cool too, Steve, is that the reality is that this will help people more than just in trading too. Because you can bring it anywhere, right?
Oh, in fact, it's a must. You have to be able to utilize these tools to influence your health, your wealth,
right.
and your relationships.
Right.
Because if any of those are out of whack, everything's out of whack.
Oh,
It's like a tire. It's like, imagine, that those are the three core areas of your life, and two of them are okay, but one of them is off kilter. You're never going to have a round tire. Imagine driving down the street that way. So this is about truly being able to bring everything into balance, and it's about being able to simply break. This is truly about breaking through. And everybody, no matter what level you're at, we're always trying to reach for another level.
Yeah.
And so in each of us, that means we have to overcome some barrier that's stopping us from being able to do that. So it's, I'm very passionate about what I do on the radio shows and technical trading and so forth. But the reality is I could be no more technical. I could be no more passionate about anything in life than really this. Being able to master the art of the psychology of trading and life out there. So it's going to be a blast. It's going to be a good time.
Well, it's wild, man. It's yesterday, folks, when you're driving around the car, when I drive in the car, you don't always think about, when you're in the car, I seem to be even thinking more. I'm laughing. I always talk to myself anyway, right?
Sure.
So I'm laughing. I'm saying to myself, man, my life is so simple. It really is. And what it is exactly what you just said, man. I like to trade and make money. I like to have a good relationship, and I like good health. And I was laughing at myself. I was saying to myself, that it? I said, that's it. I can be happy forever. Do you know what I mean? It's like crazy.
Well, look, that's a whole. There's the science of achievement and the art of fulfillment.
Yeah.
And what you just talked about there, the art of fulfillment is the thing that escapes most people out there. You just take a look around, as we stop and watch news events and things of that sort. We see people that have so much, but yet really have so little.
Right.
You take a look at all the famous people that we about that deal with either a suicide or a drug overdose.
I know it's so sad. Right.
You got that great actor Philip Seymour Hoffman, right?
Yep.
You got
it's terrible. Yeah. Right.
Who's the real funny guy that just
Robin Williams.
Robin Williams, right? So these guys understand the science of achievement. That's why they win Academy Awards or make people laugh. Or they're successful financially. The science of achievement is simple. It's because it's repetitive, and once you understand the patterns, you know what's necessary in order to get the job done.
Right.
So, and then it's just a matter of leveraging up. So once you understand your trading system and you're comfortable with it, then you go from one contract to 2 to 3 to 4, what have you. So science of achievement is simple, but the art of fulfillment, what you just said, and it's so beautiful. I'm glad that you said that. That is what so many people miss out on. And that's why people walk around being unhappy.
Right.
And I actually teach folks how to be able to get through that hurdle as well.
Right. And folks, what you do, come over to our website at TFNN, and it's only $97, folks. 2 workshops. Tomorrow night and a week from tomorrow night, okay? You're talking from 6:30 to 7:15. Now, if you can't make them live, it doesn't matter, okay? Because they're going to be on your page for a full 30 days, okay?
Right.
You can expect a great workshop, a lot of great information, and this is that type of information, folks. Okay, is it's not something that basically is as Steve said, a one cookie cutter deal. What it is that, and this is the wrong word I'm probably using, but there's tricks. There's really tricks. I mean, I use tricks. A guy taught me tricks years ago to basically trick yourself. Do you know what I mean? It's like, hold it.
Not only do I know what you mean, 6.5 years ago, I used to attend different workshops, and I was there really as a student because I wanted to be able to take some tools and be able to leverage that and use it for myself.
Right.
6.5 years ago, I started attending those workshops and said, I want to know the trick.
Right.
I want to know what they're doing, how they're doing it, why, so that I can impact other people's lives. So you are, it's kind of like the Wizard and the Wizard of Oz. What are they doing behind the curtain?
Yeah, you're just brainwashing yourself, basically.
Yes.
And that's what you're doing. So instead of brainwashing yourself that I can't do this, you're brainwashing yourself that I can.
Absolutely.
And the amazing part is that you don't even know how it happens, and I still don't know to this day, but I know it works.
Yes, you do.
That's the crazy part. Do you know what I mean? It's like, okay, because you know when you get more intense versus less intense. And if you get more intense, that energy, something happens, man.
Absolutely.
Well, listen, man, we appreciate all the work you do here. Your great show, and we look forward to the workshop tomorrow night.
All righty. Thanks. Have a great afternoon.
Okay, man. Have a great one. Have a safe one. You stay right there, folks. We're coming right back. Now, come over to our website at TFNN. You're going to see it right on the front page, The Psychology of Trading. Going to be right back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Now, check this out, folks. So this is going to be pretty cool watching this whole thing shake out. And what it is this. Okay, so let's picture that. We're just going to go through a thought process here. So let's picture that the bond market has topped out. With the bond market topping out, this is a 34-year bond market, bull. The broad market, meaning the S&Ps, the Dow, the NASDAQ, is doing little conniptions because it's basically rates are going up, right? Well, simultaneously, what you think, right, is that rates going up is going to hit the real estate market. No doubt, right? Higher rates, you know, and particularly, you know, we have Tiger Real Estate Opportunity Fund. We own a lot of property, selling a lot of property, renting a lot of property, buying a lot of property, all of the above, right? So the thought process that I have to go through on a continual basis is that, okay, where are we in that property market? So in that aspect, and this is what I love it when, you know, when you really just start going out there and thinking. When Steve and I were just talking, what happened is that it was bringing me back. The first time that I really stopped brainwashing myself was in the 70s, okay? And then I realized, right, the first house I bought was in the 70s also, right? So check this out. What I start realizing then is this, is that real estate goes on tiers. And even when rates were 10, 11, 12%, there was a fortune made in real estate. The first house I bought was 14%. I still made a fortune on it, you know, like 50% on it, which is sick, okay? Now, that was 50% of smaller money, though, right? So in the break right then, I'm saying to myself, oh, my God, hold it. So watch what happens. Now, there's going to be some people that get trapped in the markets, no doubt. There's going to be plenty of people, though, that do what? That know a bear market, or probability-wise, figure a bear market has started in bonds, so they're going to move out of bonds. They're going to know, probability-wise, saying, okay, I better protect myself in the stock market and get stops in, and then all of a sudden they have cash. Where's it going to go? Where is it going to go? Guess what, folks? It's going to go in real estate. That's where it's going to go. You'll get volatility. There's no doubt about that. So, with that being said, what is the plan you want to map out? What the plan you have to map out is this. Okay, so the formula goes like this. First off, the formula has to be, number one, don't get into any real estate if it doesn't cash flow positive. And in some parts of the country, you won't be able to do that. Many parts of the country, you can. We can here. There's other parts of the country you're absolutely going to be able to do that. That's the first crucial one. The second one goes like this, and this is where this is what happened in the 70s and 80s. You take the interest rate structure, okay, and as the interest rates go up, the first 3 or 4 months, there's going to be messes. There's going to be disasters. All that stuff's going to happen. But the longer-term formula goes like this. You're going to take the interest rate structure. You're going to take the inflation rate structure, because that's going to come back, because the flood of money is here. Then what you're going to take is at what is the structure that is coming into the real estate market itself. And as long as the top number, meaning the interest rate, the inflation rate structure, and how much a house can go up versus the interest rate structure is in a positive, you're in action. So we'll watch how this thing plays out. I just wanted to lay that out there right now, because what you want to be, folks, is this. Well, if I've found out anything, is this. You want to be in before the crowd, and you want to be out before the crowd. Now, you'll get out before, it could be a year before the top. Who cares, okay? What you should be caring about at all times is that, number one, is your probability higher you're going to make money and get your principal back? Number two, are you going to make money? And then number three goes like this. Number three is getting your cash out of any investment so that you have cash, and then you have to sit and wait. The sitting and waiting game, okay, is one cool deal, okay? Yeah, you have to get used to it, but bottom line, I've seen enough cycles that if, in fact, you do sit and wait, you're in a much better position to pounce. And what also happens is this always, if you're in a position, if you're in a strong cash position, your thought process is much better than in a position where you're being squeezed, or let's say that you're not even squeezed. Let's say that you're in a decent position, but not a strong position. If you're in a decent position, you'll take a few risks that you shouldn't be taking. If you're in a strong cash position, it just seems that you just don't take positions without a real focused decision process, and you're getting in at the beginning of trends versus the middle or the end of trends. Now, if you're young out there, okay, if you're a young man or woman, bottom line, you're going to have a harder time of it, because I know when you're young, you're indestructible. We've all been indestructible when we're young. So you're going to take a couple of whacks all over the place and hit the gutter, and just remember, just get back up. Because what does happen is that you absolutely have to, you don't have to take the whacks, but it seems I've never found anyone that hasn't taken a few whacks, okay? And it seems that you take them when you're younger, because what happens is that you haven't seen the cycles, okay? So, hey, we'll see where this thing shakes out, man. But I can tell you, on a longer-term basis, this is a big number. The turn in bonds is a big number. We'll see how this shakes out, across the world, because what we do have, let me just see these rates. You see, even across the world, I'll put this up for a second. Across the world, they've already started moving. Normally, you remember a couple weeks ago, I'd put this up every single time, and I was putting this up. You had negative rates. There's no negative rates here right now. Bottom line, our 10 years at 2.2. You still have, Portugal 2.5. But where we were negative before in Sweden, it's positive by 0.73. You're positive in the Switzerland by 0.92. Switzerland was negative also. So that turn's happened. That's kind of how this has shaken out. So what you want to position yourself as and be as to where you're comfortable, number one, where you are not going to get hurt, and protect yourself. The real key here, inside particularly the bond market and the equity market, is to make sure you protect yourself. Because, see, the aspect of how we went down from 2007, how we came all the way back, okay, is as good as you get, folks, okay? So grab it. Don't sit there and let the market grab your bread again. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right back here tomorrow. Go get them, folks.
Tiger Team.